So how is the Singapore market, the STI, Straits Times Index, doing as we begin 2023? Right? What is the outlook this year? What are some of the key levels we'll be looking at? And what are the factors affecting the market? Hey guys, Joey here, top tier MyZero trader in Philips Securities. And in today's video, we'll look at the STI, the Straits Times Index right here, all right, trading at about 3,291 right now. So look at the index, look at some of the key levels, what are some of the support levels, what about the trend, can we actually see more upside in 2023 for the entire market, all right, and what's happening right now. So let's dive into the STI charts. So this is the STI here. You can see that since 2021, I would say over the past like 2 years in 2021, 2022, right, we have been pretty much, I would say, consolidating. So we have been like pushing higher, but each time we push higher, it came back down, we found a bit of support and it rebounded, right? So in 2022 especially, I mean, that's where we saw weakness in global markets, in the US, the S&P 500, maybe you look at the S&P 500 in a bit, but they have been seeing selling pressure due to talks about rate hikes, about inflation, and now recession fears. The market has been quite weak since 2022, but for the STI, in fact, we have been, I would say, seeing a really good support over the past 1 year and maybe even in 2021. So what is this key support level? This would be the level right here, I think the 3,000 level. I talked about it a few times already. So 3,000 to maybe around the 3,050. Let me just go ahead to draw another support line right here. So since 2021, for like 2 years, right, each time we near this 3,000 to 3,050 right here, all right, we have seen a couple of touches on nearing it, and then we rebounded all the way to like about 3,003, and then maybe even somewhere higher to about 3,450. We touched it twice. That was in last year, 2022, and then we came back down. So that was kind of like the consolidation phase, right? Not really not really like a very strong uptrend, but not really like a very negative or bearish downtrend in last year. So STI has been holding quite well, in fact, compared to the US, the S&P 500. All right, and looking at this right here, you can see that this moving averages. So in terms of the longer term or mid term, we want to look at the moving averages, which will be the red and the blue line. The red line would be the 100 days moving average, like right here. You can see this 100 days moving average going up, coming down, and then now it's like kind of like flattening out. Same thing, the blue line is a 200 days moving average, kind of like longer term moving average. You can see that both of these two lines, right, both of these two lines, the blue line and the red line, they are pretty much pointing sideways for now, right? I mean, prices, this index right here is just above these two lines, which is good, all right? That's a good thing. But overall, I would say that the mid to long term trend is still really sideways. It's still really sideways. It's not really up. It's not really down. All right. It's just like a bit of a consolidation sideways in the mid to long term, and that's what has been happening, as I mentioned, right? But in terms of the short term, short term wise, we can still move up and down, as I mentioned, right? So we can kind of like push up, as I say, to about 3,450, swing up, swing down, and we kind of like headed to this resistance level. So let me just put your attention to this very key level, which I think would be key over the next few weeks or over the next 1 to 2 months to see how 2023 were to play out. And what level would that be? That would be none other than the 3,300 level, right? 3,300. Why? Right? Look at this right here. So 3,300, you can see that just last year in February, March, it was a pretty good support level here, whereby we had like a double top. You can see touch one time, touch two times, a couple of support, and eventually we broke down this support and the downside kind of like started. All right, and we kind of like attempted to retest this support, turn to a resistance 1 time, 2 time, 3, 4, 5, and now we are kind of like hitting there again, right? So this 3,300 is like 5-6 times we have been nearing it since 2022. And we just can't seem to get above it. I don't know what's so hard about it, but it just seems like each time we near it, and then the market start to sell, the banks start to sell, and we kind of like retrace back down again. It's kind of like heading back to like 3,002 or 3,150. So that has been what has been happening over the past, I would say, 10 months, 8 to 10 months. The 3,300 level. This level would be key, right? This level would be key if we want to get out of this consolidation phase, right? This consolidation phase would be none other than here, right? So let me just draw it for you. I think right now we could be seeing a bit of support at that 3150. Maybe not even 3150. I would say that, you know, over the past like 2 months, it seems like 3,200 has been pretty good support for the entire market. We have kind of like touched there and then rebounded a bit. So 3,002 to 3,003 is like a 100 points for the STI index. That has been pretty much the range, right? But we want to get out of this range, right? We want to, you know, see the uptrend continue and see more upside in 2023 for the entire market. We want to break this key level that, as I say, we have touched 6 times and came back down. We want to break it finally, all right, going above 3,003 to 3,320, 3,340, 3,350, whatever, all right. As we break this level, we stay above it, we go above it, and we start to push higher. That is where upside targets can be revised. I would say the market will be more bullish if that happens. The uptrend can slowly start to form up for 2023 in terms of all the bad news about, you know, inflation and rate hikes. People might want to, you know, put that aside for now, and then we might start to see a bit of momentum coming back again, right? Especially if there are any, you know, news flow coming in, you know, hinting that, you know, because of like a recession, some bad economic data coming in, and then the Fed might want to, like, you know, kind of like slow down the pace of rate hike, which is what it's doing right now. So like since in December, we had the rate hike of like 0.5% after 4 consecutive 0.75. We have the 0.5, and now people are projecting that, you know, probably in February, the rate hike would be like maybe about 0.25%, which is kind of like a smaller pace of increase. It's still increasing, but increasing at a smaller pace, which is a good news, right? It just shows that the Fed is kind of like, you know, slowing down its pace of rate hikes, and this whole inflationary pressure is slowly coming back down, all right, to the 2 to 3% target that the Fed wants. So if that is all working, all right, and, you know, there are no surprises in terms of inflation spiking up again, I think that is all good news for the market. I think not just for the STI, the US will also start to pick up, and we might potentially start to see a bottom in the US. And if that happens, you know, the STI you know, could see strength as well as we see a rebound in the US market. All right, so just take note of these 3,300 level. So after 3,300 level, that would be 3,450, which is pretty much that double top which I've drawn somewhere in Feb and in March 2022. We touched 2 times, it came all the way down, so that level will be key as well. That's where some selling can actually come back in the mid to long term, I think, as we approach this level. Okay, so that is the STI. So maybe let's take a look at the S&P 500 to see where we are, all right, just to give a bit of comparison for the STI compared to the S&P 500. So as I say, STI is pretty much sideways. We didn't really sold off that much. We've been holding really well. Anything above 3,000 or 3,050, I think if it does near there again, if you're trading the entire market or the STI ETF, in fact, that could be good level. So those we have covered many times. In fact, you've got in around here for the entire market, the STI ETF, you're pretty much sitting on good profits as it rebounded up already. All right, so this is for the STI. So let's move on to the S&P 500 to see pretty much where we are right now. All right. Okay, so this is the S&P 500 index, all right, the index that covers kind of like top 500 companies in the US, all right. So let's take a look at how much it has sold off in 2022. You can see it kind of like hit a peak in January 2022, just as we began 2022, right, for about a year. I mean, now it's like what, 5th of Jan 2023. So we just began 2023. So you can see we sold off from early 2022 all the way down to about 3,500 for the S&P 500, about a 26% sell down, 26.21% sold off, and then we've kind of like found a little bit of a rebound. All right, and let's see where we are right now. So you can see that for S&P 500, it looks a little bit different from the STI. As I mentioned, for the STI, right, in terms of the red and the blue line, the 100 days moving average and the 200 days moving average, the red and blue line, they were both moving sideways, and then prices was kind of like above it, right? So it's kind of like a bit of a sideways trend, moving sideways. But for the S&P 500, look at this, right? I mean, the red and the blue line right here. So let me just highlight it for you right here. So this red and blue line, unfortunately, we are kind of like still pointing down. I mean, it's not up, obviously, right? It's still down. I mean, it's been like moving down since like early 2022, and of course we got a bearish crossover. The red kind of like went below the blue right here, and you can see red is still below the blue, and both of these lines are still pointing down, right? So they are not really sideways. If they are a bit sideways, or maybe if the red has gone back above the blue, then that would be a good thing. That could point to like some signs of strength in terms of the uptrend starting to form up, you know, like the STI whereby it rebounded. If that happens, that's good. So right now it's still down, and I would say that this resistance level for S&P would be somewhere around here. You can see that we kind of like touch it about last month, the 4,000 100 level right here, a bit of a resistance here. We touch it again, came down. So it just looks a little bit more bearish, I would say, just below 4,100 level. All right, but it's not all that bearish, because the fact is that we did try to see a good rebound. All right, we did try to see a good rebound when we headed to a low of this 3,500. So this 3,500, you can see that would be key for now to prevent more downside in the US market. We might kind of like trade lower a bit, might rebound, trade lower, rebound again, and we might actually retest this 3,500 level again. This level is key. If we can like touch it another time, and we see a push away from it again, we see some good reversal, price action again, and it pushes up, that could kind of like form what we call a double bottom, or a double bottom, which means that as it touches like one time and then a few months later it kind of like touches and pushes away from it again, that could be a sign whereby it could be a sign of the trend changing from a bit of a down to maybe side and then like potentially moving up, if we were to see the moving averages all starting to point up and reverse back up again. Alright, so that would be for the S&P 500. So US market still a little bit weaker for now. I mean, compared to the STI, I think STI looks pretty strong. We have not really sold off that much, compared to the S&P 500. So S&P 500, I mean, for the US, we are seeing some signs of stability at least, but I think eventually over the next like 6 months to 9 months, there could be a potential bottom being found. We have to see how it plays out, but so far we need more confirmation because these moving averages are all still pointing down. Alright, so yeah, this is the S&P 500, right? So let's take a look at the Straits Time Index again. You can see that we kind of like rebounded quite firmly as well. We kind of sold off from look at this, right? So double top here. So you can see this was a double top, and then we sold off, right, for the STI in early 2022. So we kind of like sold off to like only about 12 or 13%. That's it, right? 13%, and we started to rebound, and then we are pretty much back to where we were at the beginning of 2022, right? So not much of a sell down. We're just pretty much back to where we were and holding quite well. Okay, so that is the STI, right? So yeah, I hope I've given you a quick update on the outlook for 2023. What are some of the factors affecting the market? How's the difference? I mean, what's the difference between the STI and even the US S&P 500, and and in terms of the trend changing and what you want to look out for as well. Okay, so I hope you like this video, guys. If you like this video, I would appreciate if you can give me a like and hit the subscribe button as well. That would really help out the channel. And thank you so much for doing this. I look forward to see you in the next video. Right, if you want to get some of our ideas by WhatsApp much faster as a client of mine in Philip Securities, we do share some of those ideas much faster. We do cover the index as well, but there's some of those ideas whereby we share by WhatsApp. You get it by WhatsApp much faster. So yeah, do click on the link around this video. I'll probably put the link somewhere. If you're kind of like trading on your own, not much support from your broker, or you don't even know who your broker is, you're just pretty much online, no service and all that, just click on the link, come on board, and that's where you get some ideas and exclusive private training as well. Alright, so Joby here. Thank you so much for watching. I'll see you soon. Take care.